Right now, your bank is making money off of you, and it's not even hiding it. If you've got $10,000 sitting in a checking or savings account at Chase, Bank of America, or Wells Fargo, you're probably earning somewhere around $1 a year in interest. Meanwhile, that same bank turns around and lends your money out at close to 9%. On that $10,000, they're pocketing around $900 a year. That's not a typo. That's the actual gap between what they pay you and what they make off of you. And on top of that, they're charging you monthly fees, minimum balance fees, and overdraft fees just for the privilege of holding your own money. I recently started using an account that flips this completely, and the more I dug into it, the more it started to feel like my bank had been quietly overcharging me for years. It's free to open, there are no monthly fees, no minimum balance required, and it pays you real interest automatically every single day without you having to do anything. So in this video, I'm going to break down exactly what this account is, how the interest actually works, what features your bank almost certainly doesn't have, and the handful of things you need to know before you move your money over. So let's get into it. This account isn't some sketchy fintech app you've never heard of. It's offered through a real established financial company, and it's built to function exactly like your checking account, just without the parts where your bank quietly profits off of you. You get a debit card, you get direct deposit, you get a routing number and an account number. You can pay bills, write checks, deposit checks from your phone, and transfer money in and out whenever you want. From a day-to-day standpoint, it feels identical to using a normal bank account. The difference is entirely in what happens to your cash while it's just sitting there. At a traditional bank, your money sits in an account earning next to nothing while the bank uses it to fund loans, mortgages, and credit cards and keeps the profit from that spread for themselves. With this account, your balance earns a real interest rate automatically, the moment your money lands. There's no separate savings account to open, no transfer you have to remember to make, and no minimum balance you need to maintain just to qualify for the good rate. It just works in the background. Let me put that into actual numbers because this is where it gets real. If you've got $20,000 sitting in a checking account at a major bank, earning roughly 0.01%, you're making about $2 a year. That's not a rounding error. That is genuinely all you're getting. Now take that same $20,000 and put it into an account, paying a competitive rate, and you're looking at several $100s a year, sometimes more, depending on where rates are sitting. Same money, same amount of effort. The only thing that changed is where you decided to park it. Now here's something a lot of people get wrong before they even open an account like this. And it has nothing to do with the interest rate. They assume that because it's not a traditional bank, their money isn't protected. That's not the case here. This account is FDIC insured, which means your deposits are backed the exact same way a checking account at Chase or Wells Fargo would be, up to the standard coverage limits. And in some structures well beyond that through partner bank networks. So you're not trading safety for a better rate, you're getting both. To put that in plain terms, the FDIC is a federal agency that steps in and protects your money if the bank holding it ever fails. It's the same protection that's been backing up traditional checking and savings accounts for decades. A lot of people hear, not a traditional bank, and their brain automatically fills in riskier, but that's simply not how this works. The label on the account doesn't determine the safety of your money. The insurance behind it does. And in this case, the insurance behind it is identical to, or in some cases stronger than, what you already have at your current bank. There's also a common mix-up worth clearing up here because a lot of finance content online blends two different types of accounts together. Some high-yield options out there are brokerage-based, meaning your cash gets automatically moved into a money market fund, which is SIPC insured instead of FDIC insured. That's still safe, but it's a different kind of protection, and it confuses people who assume all high-yield accounts work the same way. This account isn't that. It's a straightforward deposit account with straightforward deposit insurance, which honestly makes it one of the easier decisions in personal finance because you don't have to weigh a slightly higher yield against a different insurance structure. You're just getting a better rate on money that was already sitting in a plain checking account doing nothing. So now that you understand the basic mechanics, let me walk you through the features, because the interest rate genuinely isn't even the most impressive part of this account. Number one is unlimited ATM fee reimbursements. Not limited to some small in-network list of machines you have to hunt down on an app, but any ATM, anywhere, domestically, and in a lot of cases internationally too. If you've ever paid a $3, $5, or even $10 fee just to pull out your own cash, this alone eliminates that completely. Most banks either charge you their own fee on top of the ATM's fee, or they only reimburse you if you stick to their specific network. This account just covers it, no questions asked. Number two is no foreign transaction fees. If you travel internationally, even occasionally, this is a genuinely big deal. Most debit cards charge you between 1% and 3% every single time you swipe your card in another country. That might sound small, but on a 2-week trip where you're spending a few $1,000s, that adds up to real money leaving your pocket for absolutely no reason. With this account, you pay in the local currency and you keep the whole amount. Number three is that early direct deposit. Depending on your employer's payroll schedule, your paycheck can hit your account up to 2 days before your actual payday. That might not sound like much, but if you've ever been stuck waiting on a Friday paycheck that doesn't actually land until Monday because of a holiday weekend, you already know why this matters. Number 4 is that there are zero fees across the board. No monthly maintenance fee, no minimum balance fee, no fee to open the account, no fee to close it, no charge for paper statements, nothing. The cost to actually own and use this account is $0. Compare that to your current bank where you might be paying $12 or $15 a month just to keep a basic checking account open unless you jump through hoops like maintaining a minimum balance or setting up a specific direct deposit amount. Number 5 is automatic compounding. Interest is calculated daily and paid out on a set schedule, and once it lands in your account, it immediately starts earning its own interest. You don't have to do anything, transfer anything, or remember anything. It just compounds quietly in the background while you go about your life. Number 6 is fee-free overdraft protection up to a certain threshold. Instead of getting hit with a $35 overdraft fee the moment your balance dips slightly negative, which is one of the most common ways traditional banks profit off of people living paycheck to paycheck, this account gives you a built-in cushion before anything gets charged. Number 7 is the ability to open multiple sub-accounts called vaults for free. So instead of just one lump sum sitting in your balance, you can actually bucket your money out by purpose. One vault for your emergency fund, one for a vacation you're saving for, one for a car repair fund, whatever makes sense for your life. Each of those buckets still earns the same interest rate, but you get a much clearer picture of what your money is actually for, instead of everything blending together in one number on a screen. Number 8 is same-day and next-day transfers for moving larger sums of money without needing to call anyone or wait on hold. If you're moving money to cover a big purchase, pay off a credit card, or fund an investment account, you can usually get it done online in a matter of hours instead of the several business days a lot of traditional banks still take for basic transfers. Now, most people set an account like this up and still leave money on the table without realizing it because they don't fully understand what it's actually replacing. Here's what most people miss. This account is designed to replace both your checking account and your savings account at the same time. Think about how most people currently manage their money. They've got a checking account where their paycheck lands, and then a separate savings account somewhere else where they try to set money aside, usually earning close to nothing in both places. With this account, your entire balance earns interest whether you're about to spend it tomorrow or not touch it for 6 months. You can swipe your debit card, pay your bills, and transfer money out whenever you need to, all while every dollar sitting there is still working for you. This also makes it one of the better places to keep an emergency fund. Think about what an emergency fund actually needs to do. It needs to be liquid, so you can access it fast if something goes wrong. It needs to be safe so you're not gambling with money you can't afford to lose. And it needs to actually earn something while it sits there waiting, because inflation doesn't pause just because your money is sitting in a savings account doing nothing. Most people have their emergency fund parked in a basic account earning next to nothing, which means that money is quietly losing value every single month it sits there. This account checks all 3 of those boxes without adding any complexity to your financial life. I'll be honest, when I first moved my own emergency fund into an account like this, I wasn't expecting it to feel like a big deal. It's not going to change your life, but watching a few $100 extra show up over the course of a year for doing absolutely nothing differently than I was already doing made me realize how much money I'd been leaving on the table for years without even thinking about it. It's the kind of thing that doesn't feel dramatic in the moment, but adds up quietly in the background while you're focused on everything else going on in your life. Now, I want to be upfront with you because this account isn't perfect for everyone, and I'd rather you know the downsides going in than find out after you've already moved your money over. The first thing is that this isn't a brick and mortar bank. There are no physical branches you can walk into. If you're someone who likes being able to sit down with a person, get something notarized, or resolve an issue face to face, you're not going to get that here. For most day-to-day banking, this doesn't matter much since everything can be handled through the app or over the phone, but it's worth knowing up front if that kind of in-person access matters to you. The second thing is that you generally can't deposit physical cash directly into the account. If you regularly receive cash, tips, or money orders, you're going to need a traditional account somewhere to deposit those first before transferring the money over. It's not a deal breaker, but it does mean this probably isn't your only account if cash is a regular part of your financial life. The third thing is that the interest rate is variable, not fixed. It moves with the broader interest rate environment, which means what you're earning today isn't locked in forever. When rates go down across the board, the rate on this account will come down too. That's not unique to this account specifically. That's true of basically every high yield account out there, but it's worth understanding so you're not surprised down the road. And the fourth thing is that some third-party budgeting and payment apps that rely on certain bank linking technology don't always connect instantly. You can usually still link the account manually using your routing and account number, but it might take a couple of extra minutes compared to the instant login you're used to with traditional bank. Honestly, for most people, none of these are real deal breakers. My actual recommendation is this: open the account, move your emergency fund and the bulk of your day-to-day savings into it, and keep a small no-fee account open at a local bank or credit union if you specifically need cash deposit access or in-person branch services. That way you get the higher rate and the modern features on the vast majority of your money while still keeping a backup option for the handful of things this account can't do. So that's the account that quietly outperforms almost every major bank in the country on interest, fees, and features, all while costing you absolutely nothing to open or maintain. It's free, it's FDIC insured, it pays real interest automatically, and it can genuinely replace both your checking and savings account in one place. So that's SoFi Checking and Savings, the account that quietly outperforms almost every major bank in the country on interest, fees, and features, all while costing you absolutely nothing to open or maintain. It's free, it's FDIC insured, it pays real interest automatically, and it can genuinely replace both your checking and savings account in one place. If you want to check it out for yourself, I've got the link down in the description below. But here's something I didn't mention at the start of this video. SoFi isn't the only account doing this right now, and depending on how much you're sitting on and what your specific goals are, there might be an even better fit for your money. I put together a full breakdown of the best high-yield accounts you can open right now, which ones are actually worth your time, and which ones you should stay far away from. If you want to make sure every dollar you have is actually working as hard as it possibly can,